Hello, Beth and Jeff. Congratulations on finding that home. Um, Working with Ron, your realtor, and I look forward to working with you as we get this loan closed here first part of November. I wanted to update this rent versus own analysis that we did a generic one for when we were pre-approved before we were looking for a property. But first, I want to go over the details of this transaction with you, which I sent you out the updated good faith and stuff like that. But let me just kind of briefly summarize it. So what we have here, of course, is a $300,000 sales price. That's what you're buying the property for. You're doing the FHA loan. You've decided to go with use your 3.5% down payment. So that's about $10,500. Now, here is now in the FHA loan, there's a mortgage insurance premium, which is finance. So if you'll see here on the summary of the details of the transaction, here is what uh, that 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 comes up to be. But here as well, you'll see that it's actually financed, so it's part of a monthly payment. Now, here is on an FHA loan, the seller can credit up to 6% of costs. In this case, they're going to be crediting 3.3% of costs. So, as it pertains to our mortgage, that equates to all of the closing costs that the seller can pay for you. So the closing costs are here the prepaid expenses. That's of course the taxes, a year's insurance premium, some prepaid interest that you'll be paying as well, and then also the closing costs, which right here the 5150, which is the 1 point, the appraisal, the lender charges, title and escrow, all of that there. So all of these fees here, all these costs here will be credited by the seller with their seller credit, and then this mortgage insurance will be financed. So the dollar amount that you'll be coming out of pocket with at closing will be your 3.5% down payment. Now, of course, you're eligible for the homebuyer tax credit for $8,000. So and that's a dollar for dollar tax credit. So when you get that tax credit back, when you apply that tax credit, you're going to actually be getting into this house for $2,500. So let's go take a look at this rent versus own analysis and see the economic impact of this transaction for you, updating that over time. So here we are with this rent versus own analysis, and you know, boy, you're really going to be really affecting your net worth and your financial situation a great deal over the next 5 to 10 years. Here's what you're paying right now in rent: 1625. You said you had some renters insurance. You're paying about 1670 a month. Your new mortgage payment will be 1576. That's the taxes, excuse me, the principal and interest. Now we have your taxes and insurance on there, so your total payment's going to be about 2139. Now also, when you kind of your net monthly payment, when you look at what your tax benefit's going to be on a monthly basis and the principal paid, i.e. increasing your equity, your net monthly payment, and one way to look at it is 1316 a month. And here are some of the assumptions that we've made. 2% appreciation, I think that's pretty conservative. Over 30, and you mentioned you had a tax bracket around 30%. Here's your purchase price, the loan, the rate we've locked in at, and then the closing costs. We've already broke that down on the previous screen, where it's going to be effectively about $2,500, and we compare that against a rental assumption of about 4% increase annually. This is the impact here is pretty powerful when we look at it down here, and like where you're going to be at in like 5 years going this path. Over a 5 year period of time, you're going to be paying about $108,000 in rent. You'll be paying more on a monthly basis towards your your mortgage payment. But when you look at the principal that you're going to be paying down and the tax benefit that you're going to have, your net costs are substantially less, and your total equity is going to be about just shy of 65,000, and in 5 years. And as we look down here further, look at this. In 10 years, you're going to be about $130,000 a swing towards your net worth improvement from buying this house. So again, congratulations. I look forward to working with you closing up this transaction here in the next couple weeks. And please give me a call if you have any questions. Talk to you later. Have a good rest of your day.